In the cyclical world of insurance, hard markets present unique challenges. Hard insurance markets are characterized by high premiums, limited availability of coverage, and strict underwriting criteria. In these markets, it can be difficult for businesses and individuals to obtain the insurance they need. We'll walk you through how these elements blend together to help you operate efficiently, even during a hard insurance market. During these periods, premiums skyrocket, and coverage options, contracts, and underwriters grow stricter in their assessments. Navigating this tough terrain might seem daunting, but a strategic approach can turn adversity into an advantage. Let's start by understanding the nature of the beast. A hard insurance market is characterized by high demand for coverage but limited supply due to insurers' risk aversion. Premiums rise, policies are non-renewed, and coverage options shrink. Sound familiar? You may be in a hard market, so how do you get a firm grip on this slippery slope? Firstly, resilience is key. Be proactive and agile. Evaluate the risks your organisation faces, quantify them where possible, and map out potential impacts. This risk management process provides insights into your risk profile and highlights areas of vulnerability. Now you have a starting point. Understand that the market is tough, but don't be discouraged. Instead, become agile and adapt your insurance portfolio to minimise the impacts of a hard market. The first step to being efficient in a hard insurance market is to do your research. This means understanding the different types of coverage available and the specific risks that you're facing. There are a number of resources available to help you with this, including insurance websites, industry publications, and financial advisors. Once you have a good understanding of your needs, you can start comparing quotes from different insurers. Be sure to compare not only the price of the coverage, but also the terms of the policy. Some policies may have exclusions or limitations that you're not aware of. Secondly, embrace innovation. Hard markets often bring about changes that can lead to opportunities for those willing to adapt. One such innovation is the use of captive insurance companies, which provide a self-insurance option to manage risk. They might be a strategic option to consider during a hard market. Technology too plays a significant role. Leverage data analytics to refine risk management strategies and explore insurance tech solutions to streamline processes, reduce costs, and enhance decision making. Thirdly, relationships matter more than ever during a hard market. Now is time to nurture relationships with your brokers and underwriters. Regular communication and transparency can enhance understanding, leading to better policy terms. If underwriters know your risks well and trust your risk management strategies, they are more likely to extend favourable conditions. Are you struggling to find affordable insurance? If so, you're not alone. In a hard insurance market, it can be tough to get the coverage you need. But there are a few things you can do to increase your chances of success. So what is next? Pacing oneself in a hard insurance market is about balancing the need for quick adaptation with the understanding that strategic changes require time and careful planning. Keep abreast of market trends, regulations, and changes within the industry. This constant flow of information will enable you to react to changes in a timely manner without rushing to hasty decisions. Instead of waiting for problems to arise, take a proactive stance. Anticipate challenges and start preparing your solutions. By doing this, you are avoiding the stress of last-minute adjustments. Now see this. Emotions and the stages that this roller coaster rides are very important to have an understanding about. The Kubler-Ross change curve, often associated with the 5 stages of grief, is a model that outlines the common emotional responses to significant change or personal loss. These stages include denial, anger, bargaining, depression, and acceptance. Denial is the first stage where the reality of the hard market hasn't fully sunk in. Stakeholders might believe that the increase in premiums or the drop in coverage is temporary or a mistake. They may ignore the warning signs and continue with business as usual. Once the reality of the hard market sets in, anger and frustration can follow. Stakeholders might blame insurance companies, regulators, or even their own risk management practices. There might be a sense of injustice or a feeling of being victimized by the situation. Bargaining involves attempts to avoid the crisis or lessen its impact. The persistent nature of a hard market can lead to a sense of hopelessness. Stakeholders might feel overwhelmed by the increasing costs and the lack of viable alternatives. There may be worries about financial sustainability or the ability to manage risks effectively. Acceptance is the stage where stakeholders accept the hard market as the new reality. They understand the factors contributing to the situation and start exploring and implementing strategies to navigate it effectively. Acceptance allows for constructive action, strategic planning, and, eventually, successful navigation through the hard market. By acknowledging these stages, stakeholders can better anticipate reactions, address concerns empathetically, and guide their organizations towards acceptance and action. Now let us take a look at some relevant examples from where we can learn new things. Market Corporation is an insurance holding company that specializes in hard insurance markets. Markel is known for its innovative underwriting approach and its ability to identify and manage risk. The company's strategy is to focus on niche markets where it can differentiate itself from its competitors. Markel also invests heavily in technology and data analytics to help it better understand and manage risk. Everest Re Group is another insurance holding company that specializes in hard insurance markets. Everest Re is known for its strong financial position and its ability to withstand periods of market volatility. The company's strategy is to focus on specialty lines of insurance, such as property and casualty, marine and aviation. Everest Re also invests heavily in research and development to stay ahead of the curve in terms of risk management. Axis Capital Holdings is a global insurance and reinsurance company that specializes in hard insurance markets. Axis Capital is known for its strong underwriting discipline and its ability to attract and retain top talent. The company's strategy is to focus on specialty lines of insurance, such as energy, political risk, and environmental liability. Axis Capital also invests heavily in technology and data analytics to help it better understand and manage risk. These companies have all been successful in identifying and managing risk in these challenging markets. Their strategy involves a combination of strong financial positions, innovative underwriting approaches, and investments in technology and data analytics. After going through their strategies, we got some additional tips for you. Coinsurance involves requiring the customer to share in the cost of any losses that are incurred. This is done to reduce the insurer's exposure to risk. For example, an insurer might require a customer to pay 20% of any losses that are incurred. Deductibles involve requiring the customer to pay a certain amount for any losses before the insurance company will pay anything. This is done to reduce the insurer's exposure to risk. For example, an insurer might require a customer to pay a $500 deductible before the insurance company will pay anything for a car accident. These strategies can help to make hard insurance markets more profitable for insurers. In some cases, you may be able to find alternative forms of insurance that can provide you with the coverage you need. For example, you may be able to get group insurance through your employer or association. You may also be able to get coverage through a government program such as Medicare or Medicaid. Also, your insurance needs may change over time. Make sure to review your coverage regularly to make sure that it still meets your needs. This is especially important if you have moved to a new location or if your financial situation has changed. Lastly, maintain a customer-centric approach. Although hard markets make it difficult to provide coverage at low rates, customer retention should remain a priority. Use this time to educate your clients about the market conditions and reassure them about your commitment to serving their needs. Offer alternative solutions and advice on risk management techniques they can adopt to reduce their risk profile. So are you ready to take on the hard insurance market? The storm might be fierce, but it's navigable. And with the right strategies, you can not only survive, but thrive. Let's weather the storm together and emerge stronger on the other side. The challenge is real, but so is the potential for growth. The question is, are you ready to seize the opportunity? Guys, some extra tips to acknowledge for you. Insurers may ask you to provide documentation to support your claims. This could include things like proof of income, proof of assets, or a copy of your driver's license. And before you sign a policy, be sure to read the fine print. This is where you'll find important information about the terms of policy, such as exclusions, limitations, and conditions. In a hard insurance market, insurers may be willing to negotiate on price or coverage terms. This is because they're competing with other insurers for your business. Be prepared to walk away from a deal if you're not happy with the terms. So, we are concluding this video with a quote from the finance king Warren Buffett himself. Insurance is the only product that you hope you never have to use. If you find this video useful, give it a thumbs up. All your doubts and queries are most welcome in the comments box below. Until next time, bye bye.